I built this indicator based on parameters that were missing in standard analysis, especially those related to mass and changes in velocity. It's not perfect, and you need to understand how to read it correctly, but it can provide important information about price movement. Let's take a look at what its code is telling us about Bitcoin in the 1-week resolution scale. From every pivot point, the indicator measures volume and momentum on each candle, and through its algorithm it classifies the relationship between them. The values displayed on the pivot lines show the ratio between rising and falling volume, and rising and falling momentum, creating a box of force on both sides of the pivots. It acts like a device that measures the amount of energy inside the pot, which in this case is the price range. Lines where the balance is negative cause the algorithm to calculate the next expected price range, and mark those lines as liquidity, indicating an imbalance shifting to the opposite side. When I look at this chart, the first thing that stands out is that price experienced a strong downward move. But instead of continuing to collapse, it transitioned into a state of balance, a trading range where buying and selling pressure are relatively equal. This is often where the market pauses to breathe before choosing a new direction. Now, the truly important action happens inside the blue zone. This area marks a point where price, demand pressure, and momentum, measured through RSI, all converge. I refer to this as a liquidity compression zone, a location where larger players tend to operate, filling positions quietly while volatility contracts. When price tags this zone and reacts, it is rarely random. It usually reflects intentional positioning. And that is exactly what we see here. Price reached the blue area, paused, then pushed upward slightly. That movement indicates active buyers, perhaps not enough to reverse the trend outright, but definitely strong enough to halt the decline. This behavior is known as a demand response. To evaluate whether this reaction has the potential to evolve into a full reversal, I examined two key elements. 1. The price equilibrium line. This is the median line reflecting where price finds balance. As long as price remains below it, the market still leans bearish. Only a clean breakout above it signals a transition to buyer strength. 2. RSI behavior. RSI reveals whether buying or selling pressure dominates. When RSI hovers near 50, the market is neutral. No side is clearly in control. For confirmation of bullish continuation, I would want to see RSI rise into the 56 to 58 range or higher. That's the threshold where momentum truly aligns in favor of buyers. At this moment, neither condition has been fulfilled yet. So my professional conclusion is: 1. Clear signs of demand presence. 2. A positive reaction from the blue compression zone. 3. The system indicates the market is in decision mode. However, without a break above equilibrium and RSI expansion beyond neutrality, we do not yet have a confirmed trend reversal, only the beginnings of a possibility. In other words, the market is showing early signs of shift, but it has not yet declared who is in control, buyers or sellers.